Hello and welcome to Find Your Freedom, a podcast dedicated to helping you truly find freedom in all aspects of life. Join your hosts and their expert guests as they share practical tips and strategies for finding more freedom in your life. It's time to take control of your life and create the future you want. Let's find your freedom. Here are your hosts, Lenny the Boss and Omid Rad Investor.
Welcome to Find Your Freedom. We're super excited today. We have a very, very special guest. I think a big part of finding your freedom really comes around like planning and financial planning. And I couldn't think of a better person. Our guest, Amanda Hahn, what she's done is, she's kind of like the legendary person within the real estate space around financial planning. I think one thing that's really cool about her is when you think about accountants, and that might be my own bias, like boring or like information overload, but like Amanda has, an ability to like give information in a very basic way. She has charm and she's funny. And so I don't know if you can find that combination with like an accountant, but welcome to the show, Amanda Hahn.
Oh my gosh. Well, that's a lot to live up to. So I got to be funny, give information, brief. But I'm so excited to be here on the Find Your Freedom podcast. That's what I'm about. It's not just about saving taxes. The reason we save taxes is because we want financial freedom. It helps get us there. So I am at the right place, I think.
Yeah, no, we're so excited to have you. And just for the listeners who aren't familiar with who you are, maybe just give a brief background of tell us a little bit about yourself.
Yeah, sure. My name is Amanda Hahn, and what I tell people is I'm a CPA by day and real estate investor by night. So my company that I co-own with my husband is Keystone CPA, and in the accounting firm, what we do is we help real estate investors nationwide on how to use real estate to save on taxes. So that's kind of my day job. I love doing that. And then by night, I'm an investor, just like, all of you guys here. So when we talk about the good, the bad, and the ugly, when it comes to real estate investing, I'm sort of, right there as well. So, super excited to be here to, share what I can and hopefully help people find their financial freedom faster.
Great. Listen, I'm so happy to meet you because I'm like the only investor in the world that do not know you, right? So I'm this is grateful just to let the listeners know I'm fanning out as well over here too. So, but Amanda, you just mentioned taxes, right? And a lot of people don't even know that taxes is their biggest expense, right? Some of the things I always thought about when I invest was deductions. What can I deduct, right? And I also thought about, if this house is in my name or if it's in the LLC, do I get more deductions? So I know I threw a couple of things to you there, but I know you can handle it. So Amanda, if you could, let us know just from the respect of, deductions and taxes and investing in properties that's in your name versus LLC. Is there any difference or what?
Yeah, it's funny you bring that up because I think that's probably the most common question I get time and time again. In fact, I think I posted something on social media a couple of weeks ago about LLCs, and that's like my favorite post of all time. And so it's a great question because I think a lot of people are of the understanding that you have to have an LLC or corporation in order to write off expenses, but that's actually not correct. For real estate investors, we'll just take landlords as an example, regardless of whether you own your property individually or you own it in a legal entity like an LLC, you're going to be able to use pretty much the same tax deductions and benefits in either scenario. So just because maybe if you're like a newer investor just starting out, you've purchased your first rental in your personal name, all the benefits and strategies that you read about and hear about and that we're going to talk about today are pretty much going to be the same for you, right? Even though you don't have a legal entity yet. So I love that, Lenny, you just said, when I'm spending money, I'm always thinking about expenses. That's the first step, actually, because most people don't think that way. Most people are kind of just like try to avoid talking and thinking about taxes. It's just like, like Omid said, it's boring, it's complicated. But as an investor, really, I think the one thing that you should be doing, right? Everybody should be doing this is when you're spending money, think about whether that is something that could be a tax deduction. Is it ordinary for a real estate investor to have that? Is it necessary to help operate or improve your real estate, right? So always be thinking about that. Or thinking about Lenny in the back of your mind, right? Like I remember when Lenny said he's always thinking about expenses, deductions.
So I love that. Like, I think being intentional around like expenses and you mentioned like these two words, ordinary and necessary. So maybe like break that down a little bit so that the listeners can kind of understand what that even means.
Yeah, I think as investors, everyone's really good about deducting their interest and property taxes and management fees and things like that. But what a lot of people miss out on are kind of the overhead expenses. So things that might be personal in nature, but also have a business component to it. So, common ones, for example, like car expenses. You're driving your car to look at your properties or going to the bank or a local real estate meetup. Is that something ordinary and necessary for an investor to do to maintain your properties or improve or grow your properties, right? If the answer is yes, then odds are that's a legitimate business deduction, even though the car itself, you're also driving for personal purposes, other parts of the day or other days too, right? But so always ask yourself that question. Or even, I don't know, if you go to Costco and you're buying some papers and highlighters and things like that, is it ordinary and necessary for me to have to use that as a real estate investor? If the answer is yes, keep a copy of that receipt, record it, so when you meet with your tax person, they can help you maximize that write-off.
Okay, listen, that's great. That's great. So when I was starting out in my real estate journey, right, every year I was getting my taxes done before I got a piece of real estate, and I was using, a friend, and a person who, look, you never know where I'm going with this, right? I was using a friend who knew how to do taxes and they were doing everybody taxes. I jumped on board, and then I purchased some real estate, and I'm like, I'm reading these books like, all right, well, what does it mean? Like, and they really didn't have the answer for me or whatever. They gave me an answer. I just didn't really truly thought it really believed in my soul. So I guess how important is it to sit here and not use your aunt or not use your dad or your mom or your friend that's not a CPA versus using someone that is?
Yeah, it's funny you said that because I already started laughing when you started the story. It's one that we see all the time. And, before you own real estate, right, if you just, or other investments, if you just kind of have a job, own your home, it's perfectly fine to have someone that do it or even do it yourself on things like TurboTax. But as you get into real estate, there's just so many tax loopholes, incentives, and benefits that are available. So not only do you want to work with a CPA that does taxes, like that's their job, not like my friend who works at the hair salon, but also can do taxes, in the afternoon. So you want someone not just full-time doing taxes, but also someone who understands real estate, right? Preferably they have a lot of real estate clients. They maybe own real estate themselves. And it's really, really important because, the tax code, all the regulations, it's like thousands and thousands of pages. And so in order for you to get the benefits of those tax rules, you want to have someone on your team who's really familiar with that. It's funny you brought up the point about friends, right? Because I have friends who ask me to do their returns. And sometimes I tell them no. Maybe if my friend owns like a restaurant or does some like international stuff, right? They're like, hey, Amanda does taxes. She's talking about tax all the time. But I will tell them, no, I'm not the best person because I don't know international tax law, right? So same goes for real estate. If your wealth building tool is real estate, it's a big part of your portfolio, then you want to work with someone who understands real estate taxes.
Gotcha. So I had a question. So I think a lot of people get into, investing or get into real estate. They never really think about the tax side. So they go through like, a year, then they start, doing transactions. And then they realize, oh, wait, like I should have planned. And so what would you say to somebody like they want to get started? When should planning begin as far as like tax strategies? Because I think there's like a mix of investors and when they decide they want to do it or if they want to do it and what are the advantages, I guess?
Yeah, and I think, it's a business decision, like with anything, right? When we talk about finding financial freedom, all of it, the heart of it, I guess the starting point also is money. So if you're a newer investor and there's like, I'm either going to pay for tax planning, or I'm going to buy this deal, then obviously you're going to buy the deal. And then when you have enough money, you can look at the planning and getting set up correctly and all that. But if you are someone who you have the financial resources to be able to buy real estate, and your plan is to aggressively build your portfolio and try to reach financial freedom faster, the earlier you start having a tax plan, or at least a tax advisor on your team, the better it is. Because when you set things up correctly from the start, it's easy for you to get all the benefits, right? Kind of like if you have a roadmap, you know where you're going. And if you don't, you're kind of moving a little bit blindly. Maybe you read about, having a corporation and how great that is, and you went ahead and formed one. We've seen sometimes, unfortunately, if you're not set up correctly from the front, sometimes there could be some very costly tax issues. And unfortunately, the reality is, when you make a tax mistake, it could be very costly and sometimes almost impossible to correct. And we've seen that, again, unfortunately.
Well, that's scary, right? That's definitely scary to know. So more on this story, make sure you get the professionals to sit there and make you straight. So I was listening to you, and, something rung in my mind. And, one of the things that, I was taught anyway was, hey man, pay down, the debt on the property. Right. But, I was listening to you, you was mentioning something about debt, and I don't want to screw this up, but I got to throw enough out there so you know what I'm talking about the protection with debt, and I just was like, I find it so intriguing because, like, it's good debt, right? But you also want to pay the good debt off, right? But so I guess tell us a little bit about that, debt and this protection. Like, can you go into that a little bit?
Yeah. Well, I mean, and that's a question we get a lot, right? Like, if I have money, should I pay off my debt, whether it's rental debt or other debt? Should I pay it off, or should I use it to buy more real estate? And I think the answer to that will depend. It's very different from person to person. I tend to think, like, if you're someone who's younger, you want to be more aggressive in terms of your wealth building, then having that good debt is good, because if you have $100,000, instead of buying one property, you might be able to buy 2 or maybe 3 properties, right? But if you're someone who's maybe older, it's kind of like, hey, I just want more security. Security is more important for me. I don't need a ton of cash flow to kind of have my wealth, right, built where I am. Then maybe might make better sense for you to have that peace of mind to start paying down debt. But I think when it comes to asset protection, the point I was making at the time was that if you have a property that's all cash, for example, you have no debt on it, and something were to happen and you don't have the right attorney to help you out on the asset protection side, then all of that equity, let's say 100,000, all of that could be at risk in one property. But if you use leverage, and that 100,000 you're spread across 5 different properties, you have a great attorney who's helping you with all the LLCs and the asset protection. If something bad were to happen, maybe you lose, $10,000, $20,000 of equity in one of the properties, and the rest of that money maybe is still protected. Right? So that's the kind of like the slight edge that you have when you diversify and use leverage. It could also be a form of asset protection.
Okay, that's good to know, because I have property or 2 that is paid off, and I'm thinking, should I just refi them for the sake of refining them, or like, what do you suggest?
Yeah, I mean, I think the way I look at that question is, what is the opportunity cost, right? So you have a property that's all paid off. That one property is cash flowing and growing for you. If you're okay with that, great. But again, if you're someone who's more aggressive, you say, hey, that I consider lazy asset. It's just all the money in one deal. But if I did a cash out refi and I use it to buy 3 more rental properties, now I have 3 properties appreciating for me, right? And if the cash flow might even be better if you're buying the right deals too. So that's the point where you can say, okay, maybe I want to tap into that equity just so I can grow my wealth a little bit faster. But, it's not for everyone. I definitely have clients who are like, I just want, very little debt. I don't want to lose any sleep. I want to make sure I'm well taken care of. Like, once I have X number of cash flowing properties, that's when I'm going to quit my job. So I think there's arguments for both sides, and ultimately comes down to your risk tolerance level and where you see yourself financially.
I love that. I think you think about people and their risk tolerance. And I literally had this discussion with one of my friends who has an asset locally here, and he refuses to refinance and or 1031 it into a short-term rental. He just has this long-term rental, and he has this philosophy of it's a duplex and it cash flows, and that's good enough for him. And he doesn't want any more debt. He doesn't want any more problems. This is what he's going to handle. So I guess like transitioning, like, so we have a large audience where there's, W-2 employees. And so let's say there's dual incomes. And so maybe you can kind of walk me through, like, what are the advantages of having a short-term rental, or investing in a short-term rental if you're trying to get your feet wet into real estate?
Yeah, it's so funny. I feel like I talk about short-term rentals so much that people are like, wow, is that like your favorite? But that's so from a tax perspective, definitely short-term rental is a great investment option, especially for people who have high W-2 income as a single person, or for married people, they have dual high W-2 income. And the reason for that is that if you invest in long-term rental properties, you can use all these, write-offs, deductions, depreciation to offset taxes from your rental income or other passive income. But it would be very difficult for you to use rental losses from long-term rentals to offset W-2 income for tax purposes. And we can talk for 8 hours about why that is and how you can go around that with real estate professional status. But the shortcut version is, again, two people working W-2 jobs, very difficult to be able to use long-term rental losses to offset W-2. But if you are investing in the short-term rental space, you don't have to be a real estate professional. So it's much easier for people who are just doing short-term rentals on the side to be able to keep their W-2 job, but also use the write-offs and depreciation to offset taxes from W-2 income. So that's the reason why, from a tax perspective, short-term rental is really a great investment option. And of course, we see much higher cash flow oftentimes from short-term rentals compared to just a traditional long-term rental property too.
So, here at Find Your Freedom, we are encouraging everyone to do that, is find their freedom. And, a lot of people, me, myself, we've been W-2 employees, right? And now we found, our freedom, and now we out here with the big dogs, right? Being self-employed. So I guess from that transition, right? Because being a W-2 employee, it was very easy for me to sit there and get loans, right? My credit's good. I have money in the bank. I've worked for this company for over 22 years, right? Making the transition from W-2 to self-employed. Are there any things that Omid and I and all the listeners that's making that transition or about to should, so they can set themselves up, especially if they're in real estate, to make sure that, they're still 100% go when they go after some money to leverage, to buy more real estate?
Yeah, I mean, I think, I don't recommend, there's a term for, I can't think of it off the top now, where you just like all of a sudden decide to get up and leave your job, right? Because you're like, oh, I'm going to, do this real estate thing. So you don't want to make rash decisions like that. Like you were saying, when you have a W-2 job, it's easier to get cheaper bank financing. So before quitting, make sure you plan ahead and optimize that ability, whether it's, you doing it first, or maybe your spouse might be joining you later on, but getting all that lined up so you can get all the, maximize your borrowing ability. But even after that, a lot of times people ask me like, hey, if I stop working, does that mean I can't buy any more real estate because no one's going to lend money to me? I've actually never seen that as the defining reason in terms of why somebody stops doing real estate, because they can't get loans. And I know, like, Omid, you can talk a lot more than me about this, but, there's so many different ways that you can invest in real estate outside of bank financing, partnering, whether it's, having other equity partners or private lenders and things like that. So I've never really seen that to be an issue. I think the way I look at it is if you can find the right deals, you can always find money.
And I agree with that 100%. I think like Amanda said, there's so many creative ways to kind of, purchase or get properties. I just qualified for a loan, and it was a traditional 30-year loan, and it was just using the STR income. So even though I just recently transitioned from a W-2 a year ago, I was able to use that income and qualify for 20% down. It was a $780,000 purchase. So, and that was just strictly off the STR income. So there's lenders out there. So that's on like one side. there's other, I mean, of course, there's like, creative partnerships where, somebody like Amanda said, somebody brings in the qualifies for a loan and somebody else kind of runs the operation. So, but yeah, so that's great. So I guess Amanda, like just kind of getting into like, I guess like, so somebody's they decide they're going to transition into short-term rentals and they're a W-2 earner. So like, what is like, can you explain rep status and like material participation? What's the difference? Because I think a lot of people get that confused, and that's something for me. Like I like to kind of better understand myself, like or be able to explain it to others.
Yes, for sure. I love talking about this because there's so much confusion about it. So the first thing we want to talk about is rep status. Rep status stands for real estate professional status. Okay. And for people specifically investing in short-term rentals, if you want to use short-term rental losses to offset your W-2 or business or retirement income, you don't care about rep status. So even though I just defined rep status, ignore it. We don't care about that at all. Okay. And that's the biggest misconception I see all the time, that people ask me, even like other CPAs, like, hey, this person is not a rep. So first lesson is we don't care. Short-term rentals, the rep status is out of our mind. We don't care at all. You just need to meet material participation. So as a short-term rental investor, if you meet material participation, which we'll define in a minute, if you meet material participation, then you can use short-term rental losses to offset W-2 and other income for tax purposes. Okay. So what is material participation? There's 7 different ways to qualify for them. But in practice, we really only see 2 or 3 of them being used time and time again. So the first one, sort of like the pillar one I always encourage clients to meet, is at least 500 hours on your short-term rentals. Okay, so whether you have 1 short-term rental or 10 short-term rentals, you can combine your hours. And so as long as you have 500 hours on your short-term rentals, then you've met material participation. And there's a whole list of like what types of stuff qualify, but the best way to look at it is our hours spent on the properties themselves that you own. So buying a short-term rental, getting it set up, dealing with financing, dealing with the, Airbnb and, the different platforms and cleaners, those are all, material participation hours. So if you have 500 hours between you and your spouse, then you've already met it, which means you can use short-term rental losses to offset W-2 and other income. If you don't have 500 hours, another way to get material participation is if you spend at least 100 hours on your short-term rentals and nobody else spends more time than you. So, what we typically see people spending a lot of time are like the cleaners, right? The cleaning crew, they're always there when there's turnarounds. So how many hours is a short-term rental? How many hours are the cleaners spending versus how many hours you're spending? So you have at least 100, and that's more time than cleaners or repair guys or landscapers. Then you've also met material participation. So those 2 are the most common. There's a third one too that we see sometimes, and that's you spend any number of hours in your short-term rentals, but that's more than everybody else combined. So Omid has 70 hours, and then you look at the cleaners, the repair guys, they all have combined, they have less than 70, then you would have also met material participation. So again, if you meet one of those 3, then you have short-term rental losses offset W-2 income, and we completely ignore reps status from our mind altogether.
So just to be clear, it's the combined amount and not the itemized amount. So it's not like, okay, Omid, he's 70 hours and the cleaners are 60 and the handymen all are 2. You have to actually add everyone else up, and it has to be less than using that example, than 70 hours for me.
Yes, yeah, that's the third option, right? So Omid has any number of hours, but that's more than everyone. Now, the second one we talked about, Omid has at least 100 hours, then that just needs to be more than any other person. So Omid more than the cleaning crew, Omid more than the repair people, Omid more than the landscaper, then he would have met that qualification. So yeah, they don't make it easy, change the definition around based on the numbers to confuse everybody.
So let me ask, like, once again, taxes is not the most sexiest conversation to have, right? But
I'm offended.
Yeah, well, but it's the most important one to have. I guess what tips would you throw out to individuals who, is looking to, let's just stick in real estate, that's looking to get into real estate, like what things they should have in place or things that they should do so when that tax time comes, the CPA and, the investor are happy and, because paperwork is something, right? What are some of the tips that you can give out where it can just make a happy-go-lucky time when you get your taxes done at the end of the year? I know you're shaking your head like, yeah.
Yes. I'm glad you asked that question. You set me up for the right answer. So, I think contrary to most people think that saving taxes or thinking about taxes is like in March and April when they're ready to file their tax returns. But actually at that time, you're just reporting what already did or didn't happen last year. So there's not really any strategic planning going on. So as a real estate investor or any, business owner, anybody, the best time to plan for taxes is actually during the year. So like before you buy your first short-term rental, that's the time to start planning. What am I going to do? How am I going to use this how much taxes am I going to be able to save based on that? Or before you sell a property, right? Should I do a 1031 exchange? If so, what should my replacement property be? Should I refinance or not, right? Or keep it all in the equity? And the reason is that when you're planning before you actually do these transactions, there's so many different ways you can approach this particular transaction. And you'll be able to say, okay, if I do it this way, maybe I'll pay no tax. If I do it that way, maybe I'll pay, $20,000, $30,000 in taxes. And knowing that could change what you decide to do or not to do. So I think as long as you are having that open line of communication with your tax advisor during the year, then that makes next April a lot easier because there's no surprises for you, no surprises for your tax person. And I know you guys are saying, tax is not sexy. It's, it's not super exciting for people to talk about, but I think that's what it's really important. I think for investors to understand that our job here is not for you to become a CPA. We talked about the material participation. Even then, that one thing was a lot. I think it took 3 minutes just to talk about that. But the goal is not for you to memorize those rules. The goal is really for you to understand, okay, there's things I can do. And then maybe when you're talking to a tax person, you go, which one am I going to try to do? Right. And that's pretty much it. You just need to know what are all the things I should be doing during the year so I can save on taxes. Excuse me. Next April, you don't need to understand how to calculate depreciation. You don't need to understand all those different tax things. That's what your tax advisor is there to do, right? So as long as you keep that line of communication open, update your tax team on what you plan to do this year, I think that's really the most important thing to be doing.
So somebody that doesn't wants a Cliff Notes version because they're so busy and they're the parent and they're the coach and then they're their W-2 and they're failing at everything else and they don't have time to, or they're in a position to make time. What sort of resources would you say, where do we find this information and how do we best educate ourselves in a short, condensed way? So we can ask the right questions.
So you can ask exactly. And that's what it's about. It's about you being able to ask the right questions and know when to contact your tax advisor. So my husband and I wrote 2 books that you can find on Amazon or Bigger Pockets. The first one is called Tax Strategies for the Savvy Real Estate Investor. I know people are probably like, there's no way I'm reading a tax book. It's actually a really quick read. I promise you. It has no code sections. It's just filled with stories. I think those are really good because people can relate to them and understand oh, this is what happened when somebody did or didn't do certain things. But yeah, I think that would be, a good place to start. But also, I think it's important, again, just to talk with your tax advisory team, early in the year is when people are setting goals, right? Here's my goal for this year. I want to buy X number of properties, this kind of property in these states, these cities. And that might even be a bullet point that you send to your tax person and say, hey, here's what my plans are this year. What should I know? What should I be thinking about? And then they'll come back to you, hopefully, right, with, okay, here's some kind of considerations. And if they don't come back to you, then it just could mean that you need to find a team who can help you with the planning side of it.
And that's so true. And just to recorrect myself, it becomes sexy to talk about after you see the value and the benefit, in saving all the taxes. But in the front time, it's like, no, I don't want to sit here and talk about no taxes. But real quick question for you. So there's so many CPAs out there. Is there a certain type of CPA, a person should look for when they're, starting their journey or even in their journey, just to make sure that they have the right representation to continue to build them up?
Yeah, I mean, obviously when you're interviewing CPAs, right, if your current person is not able to help you, you just want to find someone who has a good knowledge of real estate. And I always tell people this, like most people will call CPA and say, do you work with real estate investors? And 100% of the time, the answer is going to be, yes, I work with real estate investors, because everybody has at least that one person who owns one rental property, right? So that's not a great question, but you just, you really want to ask the right question, like, what are your successful real estate investors doing? And, I'm curious to know, what are your successful people doing? Are they investing in mobile homes or short-term rentals? You can ask them about the short-term rental loophole, right? Now that we know it. So maybe a trick question would be like, how important is real estate professional status for me as a short-term rental investor? Hopefully their answer is it's not relevant, right? So asking more specific questions, I think real estate investors, we all have our own little lingo that we talk in. Ask them about the BRRRR method. Right? If they have no idea what you're saying, then they probably aren't really involved in real estate.
I mean, that question, as far as like, what are your successful real estate investors doing? Like, I don't want to glaze over that. I think that's such a an important question to ask, like in general, because I think if you're asking, like you said, like if you're asking the right questions, where you're gonna get the right answers, or it'll lead you into a path, for success. So, all right.
Yeah.
So we talked.
Interesting. Yeah. I was going to say that it's interesting when I like to use the word, like, not just what are your investor clients doing, but what are your successful investors doing? Because that also helps us to gauge like what they deem as a successful investor, like what level of real estate, right? So if I said my successful investor bought 3 rentals last year, that kind of tells you, if I thought that was like my most successful person, that maybe I don't have a whole lot of real estate people that are doing larger deals, right? So I think it gives you a gauge into the level of real estate clients they have too.
And that's interesting, because one of the things I told my CPA is this. I said, hey, and this is really early on when I kind of started my journey. I said, I'm not that complicated, right? And this is for the listeners. I told him I'm not that complicated.
I think that's debatable.
Just about any and everybody, just about any and everybody can do my taxes. I said, the value that I'm going to receive is, what are you doing for others that you can educate me on? And if you can't do that, then I have to go out and find a CPA that can, because obviously I don't know anything. I just know X and O's on how to analyze this deal to know if it's right or wrong, right? But, just like you said earlier, I don't know all of the tax savings and, all of these things. That's your job. And also educating me to some things I don't know. So it might be something I want to get into, and truthfully, Amanda, we can sit here and talk about taxes and taxes and taxes forever, especially with you, because you're lovely, right? But here at Find Your Freedom, like, we always ask this one question to our friends here. Is, what does find your freedom mean to you?
I think for me, finding your freedom, financially speaking, it means that I'm able to do what I want when I want. And whether that's, this is the day when I don't want to be working and I'm going to be, coaching or with kids, or this is the day when I do want to be working specifically on these strategies, that I'm able to do that. I think for real estate investors, a lot of times we talk about, someone just wanting to leave their W-2 job and do real estate. But I also have plenty of clients who don't want to leave their jobs or don't want to stop their business, because that is what they're passionate about, but they're still looking to find, financial freedom maybe gives them that additional passive income or secondary income to be able to change their mind later on down the road too.
Yeah, no, I love that. I think it's when you think about freedom, it varies depending on like who you talk to and what is their situation. And it's I guess what I also want to find out is, I have two of your books. So how else can we find you? So I have two of your books. Maybe you can mention their names and where else can we find you?
Yeah, so the book is Tax Strategies for the Savvy Real Estate Investor. And then we have a second book called The Advanced Tax Strategies for Real Estate. And so those are people who kind of want to get a little bit more in depth into the tax saving side. My company is called Keystone CPA. And so you can go to our website. We have a free downloadable tax savings toolkit, which we talk a lot more in depth about real estate professional for long-term rental investors and the short-term rental loophole, legal entities, and all sorts of stuff. So that's, you can check that out on our website. If you want to just kind of see what I'm doing, curious about what I'm doing personally, what I'm having for lunch and what my kids are doing, and also tax tips, you can follow me on Instagram, Amanda Han CPA.
That's super cool, super awesome. So here at Find Your Freedom, we do this amazing thing, right? I'm Mr. Boom guy, and you're going to have to come boom with us today, all right? So what we're going to do and how it's going to work, right, is I'm going to count down, right? 1, 2, 3, and then in uniform, all of us is going to say boom. And the objective here is to rock the mic, rock the stage, bust some air drums. Right. So we know that you can bring in Amanda. We already know. Right. So we're looking for you to sit there and rock the house. So let me know. Are you ready?
All right. Oh, yes. Okay.
Let's
all
do
right.
this. For the individual's not looking, she's out here stretching, letting you know that she's about to bring it. All right. So turn your radios down because Amanda's about to bring it. All right. On 3. 1, 2, 3.
Boom.
Awesome. Listen here. This has been one of the best shows ever. Amanda is super amazing. If you are looking to sit here and make sure that you are strategizing the right way, Amanda left her tags. Make sure that you go out and find her. In addition to that, get her books. Her books are super fantastic. Easy reads. Easy for the regular person. You don't have to have this super duper education. She makes it very plain for you to super duper understand. Now, if you want to hear more and more episodes like the one today, we need you to subscribe. We also need you to ask some questions because there's a lot of questions that should be asked here. We know for sure because Amanda's super cool that we're going to have her back on, and Omid and I are going to answer any questions that we can. But we also need you to share this. Share this with your mother, your sister, your brother, your aunt, your uncle, even that coworker that you don't like. Share it with them as well, and make sure that they subscribe. And with that being said, until the next episode, we'll talk to you soon.
Peace.
Thanks for listening to Find Your Freedom. Be sure to subscribe wherever you listen to podcasts. While you're at it, please help us spread the word by leaving a rating and review and sharing the podcast with friends, family, and colleagues. Until next time, get out there and find your freedom.